If you struggle with knowing which fair value gaps to trade and which ones to ignore, then this is the video for you, because in this video, I'm sharing what fair value gaps are, why they form, why markets tend to revisit them, the 4 rules for finding the best ones, and also how to incorporate it in your trading to make you a more successful trader. So if you're new here, my name is Justin Bennett, forex trader since 2007, full-time trader since 2011. And as always, all of this is for educational purposes only and not financial advice. So let's get right into it. And there is a lot of misinformation out there on fair value gaps. So I'm hoping that this video clears everything up for you. So looking at this chart here on the EURUSD 1 hour time frame, let's first talk about what a fair value gap is, then we'll get into the rules for trading them. So first and foremost, when we're looking at this chart, you can see that there are some gaps here. However, what I want to talk about is what happens next here on this chart. So this right here, this is the start of a fair value gap. So what this is, when we think about the term fair value gap, what it means is a gap in the fair value. So what is the fair value of a market? So you can see back here, we had consolidation from the euro. Okay, so the market went sideways through here, and this is what's considered fair value. Okay, so when you get consolidation like this, especially for extended periods of time, this is fair value, what we also call equilibrium. So this is the fair value of a market where buyers and sellers are essentially agreeing on the value of the euro for this period of time. So when you think about a gap in the fair value, what that means is the market breaking out from the fair value. Okay, so it's a gap in the fair value. Now, the gap that forms isn't necessarily just the move, it's the candlestick pattern. Now, a fair value gap is a 3 candlestick pattern. So when we look at this chart here, the mistake that a lot of traders make is that at this point on the chart, they will look at this here at this high and say this is a fair value gap. Now, this isn't technically an FVG because it's a 3 candlestick pattern. So you have to have the next candle close. So let's go ahead and move this forward here and take a look at what a fair value gap is. The best way to explain it is just to show you on the chart. So if we look at this now on this next candle, we have a confirmed fair value gap. So what you'll notice here is that off of this high, and remember, this was within the fair value, okay, consolidation or equilibrium. So this high right here that formed, you had the next candle that closed here, the next one that closed here. So it's a 3 candlestick pattern. This is 1, this is 2 right here, and this up here is 3, okay, the green candle right here. So once you had this candle form, the next candle opens, you have a fair value gap right here off of this high. Okay, so that is a fair value gap. Very simple. But again, the mistake a lot of traders make is they look at this candle here while it's forming and think that this is a fair value gap, when in fact it's not. Because what could have happened here on this candle is the market could have just moved lower, tested this level, okay, and then in that case, it is not a fair value gap. So you have to have that 3rd candle close in order to have a confirmed FVG. So that's what a fair value gap is. Now, I want to address something here that I see a lot of misconception about, is it an inefficiency or is it an imbalance? And when you think about a fair value gap like this, the same thing for an order block or any other inefficiency in the market, a lot of traders will say, well, this is an inefficiency. Other traders will say, no, it's an imbalance. So what is it? And I want to clear this up once and for all, because it is really very simple, but they're not 2 separate things. So it's not that an FVG is an inefficiency and order block is an imbalance or anything like that. The difference between the two is not that they're this or that on the chart. They're essentially cause and effect. Okay, so what happens here is you have an imbalance between supply and demand. Now note, I did not say an imbalance in buyers and sellers, because you technically cannot have more buyers than sellers or more sellers than buyers. You have to have equal numbers, right? That's the only way that orders can be filled. Okay, but when you get this kind of move right here, you have an imbalance between supply and demand. So there was more demand here than supply could handle. So that right there is an imbalance, okay? It's an imbalance in supply and demand that creates an inefficiency, okay? So it's a cause and effect relationship, not necessarily that this is an inefficiency and an order block is an imbalance or vice versa. So it's cause and effect. You have the imbalance between supply and demand, and that creates the inefficiency back here. Okay, so I hope that clears it up once and for all, because I do see a lot of misinformation out there on the definitions of imbalances and inefficiencies in the market. Okay, now let's talk about, before we get into the 4 rules here and run through some examples, let's talk too about why markets tend to revisit these areas. And that's really the key for today's video, because otherwise this really wouldn't serve you much good, except we know that the market does tend to revisit fair value gaps like this. And what you have to remember is that market makers have the job of facilitating orders. So they have the job of matching buyers with sellers and sellers with buyers. Now, in order to do that for a very large buyer or seller, they need liquidity, okay, and lots of it. So when you think about the market moving quickly away from areas like this, there are pending orders through here that did not fill. Okay, so if you're a market maker and you have a very large, buyer or seller, and you're trying to get them filled, you need liquidity, resting liquidity like this down here. So I often say that markets are liquidity seeking machines because they are. They're going to move to wherever the most liquidity is on the chart. And in this case, you had a lot of orders through here that did not get filled. So that's why you tend to see the market come back into areas like this before continuing in the current direction, which in this case is an uptrend. Okay, we have the change of character back here, which we'll talk about in a moment. But markets tend to come back to these areas because, again, market makers have the job of facilitating orders. And if they have a large buyer or a seller, then they need that liquidity in the market. So they have tactics to get the market moving back here into pockets of liquidity so that they can facilitate those orders. Okay, so that is the bottom line. The reason that FVGs fill is because of liquidity. That's why markets move between pockets of support and resistance all the time. It all comes back to liquidity. Okay, so looking at this hourly chart, let's run through this here. Let's talk about some rules for trading FVGs. And before we do that, I want to look at this trend here on the euro and run through some directional bias analysis here quickly. And if you missed the last video on that, I encourage you to go check that out. I'll link to it in the top of this video. I explain breakup structure and change of character very simply in that video. So that is a must watch after this one. So looking here at the euro, we have a downtrend back here, lower highs and lower lows. So in order to really understand where we are now on the chart, what we have to do is come all the way back here, even before this change of character. And what you'll notice is that down here, okay, this was the last break of structure. Okay, so notice how during this period down here, we never had the euro closing below this low. So we never closed below this low down here. Okay, therefore, this is the last confirmed break of structure during this downtrend. So this is important because this is how we find the level that is going to represent our change of character. So from this area here, from this break of structure, if we move back to the highest high within this current leg, in other words, what we're looking for here, okay, and I know I'm getting into directional bias, but this is important for trading FVGs as well. When you look at this here, this is essentially our window, okay? This is the leg that we're talking about. So we have the break of structure down here, and what is the highest high within this leg? Okay, and that's clearly this one right over here. So if we snap a level right here toward this high, drag this across, that is our change of character, okay? Bullish change of character right here. So as soon as we had the euro closing above this, it doesn't matter that we dip below it here. That does not matter. All that matters here is that we closed above. Okay, we got a candle closing above here on the hourly. That confirmed a change of character. So let's go ahead and map this out, and we'll walk this forward, and I'll show you guys exactly what I look for when trading FVGs. Okay, so this right here is going to be our break of structure. Again, we did not close below the low here, so this one up here is the last BOS. Okay, so we have a confirmed trend change here for the euro. That means that once this happens, I'm only looking for buys on pullbacks. So in this case, what the first rule is going to be is that it must be with the trend. So that also accounts for change of characters because, again, once you have this, you do have a new trend forming. So first rule, it must be with the trend. That's incredibly important because if you're trading against the trend, then you're already on the losing side, and that's going to seriously hinder your chances of making money. Okay, so if you were given the option of rowing upstream or downstream, hopefully most of us would choose downstream because why would you want to swim upstream? It's the same exact way with trading. You always want to trade with the trend because that is the side that those big buyers in this case are on, or back here during the downtrend, that's the side that big money was on selling this market. Okay, now the second rule here is that if we look at this change of character, you can see that we did have multiple bars pulling back here, well over 3 candles pulling back. So what I would have done at this time here is mark out this high up here, right? Because we had a pullback down here into this area, we had the break. So this is now a new break of structure. So this is important too, because this is our second rule for trading FVG. So it must be with the trend, and it must also be before a break of structure or change of character. Okay, so we're going to say must trigger a BOS, okay, or change of character. And that's also important because otherwise, if you are trading FVGs that form without that break of structure or without the change of character, you are trading internal FVGs, okay? And that's not what we want. We want to trade after a break like this or after a breakdown like this if this trend had continued, right? And I want to point something out here too. So in this case, and I remember this distinctly because I mentioned this to VIP members in Discord, at the time we had this change of character, what I was looking for back here from the euro, I was actually looking for a move back here into this pocket, and we never got it. So following this change of character here, I told members that I was looking for a buying opportunity down here in this area. Now, it didn't happen, okay? I didn't lose, obviously, but I also didn't get my entry, and I want to point this out because this stuff is not perfect. There is no perfect method out there in trading. Nothing is ever guaranteed, okay? But this is something I was looking for down here in this area because we did have some FVGs that had formed here following the change of character, okay? But we never got that down here in this area. Now, the second thing, or the third thing here, the third rule for FVGs that I always look for is following this move here. Let's play this forward and see if this is in fact the swing high here. And you can see the market's moving higher, okay? But once we start having the pullback, once we get a few candles pulling back, specifically at least like 3 or so, right here, guys, what I'm looking for now, and actually I'm going to go back here toward this candle. So what I'm looking for once we start pulling back from the euro is I want to see the market pull back into discount. And this is incredibly important here because this is going to help you avoid a lot of FVGs that are going to get you into trouble. So for this, I have my Fibonacci tool designed in a way that I have every level removed except for the 50%. And I have these two shaded, okay? So if you want to steal my settings, here they are. I'll pop this up here for a second. And basically really simple, 0 line, 1 line, 50% line, and they're shaded in. So you can see this here on this settings. So looking right here, what I want to see from this market following again, we have the break of structure. Okay, we're with the trend. And what I want to see here, the third rule is that it must be below this 50% line. So in SMC terms, we're talking about discount because we're in an uptrend now following that change of character. I want to see the market pull back down here into this pocket. So this down here is your discount window. This up here is premium. Now, if we had been in a downtrend, so looking back here within this downtrend, what I would need to see if I draw this out again from this high up here, down here to the low, right? External high to external low. And again, I talked about that in the last video on directional bias if you missed that. But what I want to see here is I want to see the market come above this 50%, right? This is my pocket that I'm looking for. And I can narrow this down looking at FVGs, which we'll talk about next. But I want to see the market come up here into premium before looking for a short. The rule is I cannot short down here in this case. Okay, so in the case of the current situation with the euro, we have the market, we have the change of character, we have the market moving higher. So I have to see this market move below the 50% down here into discount. I cannot trade anything up here. Even if a perfect FVG forms up here, I cannot trade this because we're still in premium. I want to see the market move down here into discount. That is going to give me the best risk reward ratio. Okay, so what I'm going to do here is I'm going to draw a box below this area. And I do this too when the market's moving in real time. So we know right now that this is our premium window. So I'm going to remove this here just to keep it clean. And so this is our, discount window down here. Now from here, what I can do is I know, again, we're with the trend. Okay, we've had the break of structure. Those two rules are satisfied. And what I need now is the market to move down here into discount. So what I can do from here is I'm going to mark out this fair value gap because we know that this is a fair value gap down here. Okay, so I'm going to mark this out and I'm also going to mark out this one up here. So you'll notice that this candle right here, just below that break of structure, we also have not seen the market come down here in this area. This is a 3 candlestick pattern. This also qualifies as an FVG. Okay, so we're going to mark both of these as FVGs. Now, what you can do from here, okay, so this green box, remember, this green box is our discount. So this is our discount window within this current uptrend. Okay, following the change of character, I'm going to relabel these just to keep it clear because that is for the last time I marked it up for Discord members. So looking here at this here, we have 1 hour FVG for both of these. Okay, so 1 hour FVG on both of these highs. Okay, so remember, it's a 3 candlestick pattern where the market moves away. This is our pocket that we're looking at. So what we can do now is take that discount window that we had before and narrow this down. And that's the entire goal here. So I know that this pocket now is within discount. And I also know that we have 2 fair value gaps right through here. Okay, so very clear. And the whole point of this, the whole goal with this is we're trying to narrow down the area of interest. Okay, that's what we call it. I know a lot of people out there say level of interest or point of interest. I like area of interest because that's exactly what it is. It's not necessarily a specific level. All right, so in this case, we have this area of interest down here. So this is a pretty tight window for us to now start looking for buying opportunities, which I don't want to get too far in the weeds on that in this video. I want to keep it really focused on FVGs. I will talk about, though, how to put all this together in future videos, including entry methods, which I will discuss a little bit later in the video, so be sure to stay tuned for that. But basically, we have this area down here of interest now that we're watching, okay? So we have the uptrend, we have the break of structure, we have the market moving into discount, okay? So let's play this forward here and see what we get from the euro, okay? So once we're down here in this area, I know that I can start watching the lower time frames for a change of character. And the beauty of this, and again, I'm not going to get too far into this because I want to keep this video really focused on FVGs. I don't want to get too scattered here, but the beauty of this is that markets are fractal. And what that means is that you will find the same or similar patterns across multiple timeframes, across all timeframes. In fact, you could take a one minute chart and a 1 month chart, put them side by side, remove the label on them, show it to somebody and say, what timeframes are these? And they would have no idea, because you could essentially find the exact same patterns on both timeframes. And so what you can do here is, just like back here on the 1 hour time frame, we were mapping out the break of structure back here, change of character, break of structure, knowing that this market is now bullish. You can do the exact same thing on a 5-minute time frame, a 1-minute time frame. It doesn't matter, because in this case, we have the area of interest now defined. Okay, so the mistake a lot of traders make is they start with the 1-minute or 5-minute time frames, but they have no idea what's happening up here on the 1 hour time frame or the daily time frame, which I also cover in with members in Discord. So they have no idea what's happening on the higher time frame, so they just drop straight to the 5-minute or 1-minute, and that's where they make the mistake. But in this case, we have our area of interest defined. We're then looking for that change of character here on those lower time frames. All right, but again, I don't want to talk about that too much in this video, just because it starts getting scattered. But I know from looking at this chart here as well, like if I look at the 15-minute chart, for example, you can see that this pocket back here, and obviously this is in the past, so I know that the market's coming up here, but you can see right here that these two candles, guys, anytime you see this kind of gap right here, you know that the market is going to want to revisit that. Okay, so you can also use, and that's the point I want to make here too, that if we know the market likes to revisit FVGs within a trend, then it stands to reason that you could also use these as potential targets, and you can. And that's where a lot of traders I see, on YouTube that stop short of using them as targets. They talk about how to use them as entries, but nobody really talks about targeting these areas as well, or at least not many do. And that's where you can have a real edge in these markets. For example, we know that this area back here was that fair value gap area on the 1 hour. You're then looking for a lower time frame change of character through here. And then targets become obviously highs like this up here, because now we're trending higher, but also areas, pockets like this back here, right? You have these FVGs as well that you could also use as targets for a market like this. Okay, so a lot of uses for FVGs, but you just really have to be careful of not trading ones that are internal, because that's going to get you in a lot of trouble. So let's play this forward now on the 1 hour time frame and see what we get here from the euro. So you can see right there, we came back here into this pocket that I just showed you on the 15, right? So that right there, we filled that area, and now we're pulling back. Now here is the fourth rule for FVGs, and this is really important as well. Just like order blocks, they are a one-time use. Now, in this case, you can see that if you had bought again, you would have made money, okay? So we got the market moving sideways and then eventually moving higher. However, when you think about what an FVG is and why a market revisits it, and why a market moves away from areas like this, you have to think about liquidity, right? And so like we talked about before, you get a lot of resting orders back here that did not trigger on the way up. And so it's a one-time use, because once the market comes back here, you get those orders triggering. Traders are essentially induced into trading through here, right? And so this is a one-time use. So let's map out the third and fourth rule. So as we discussed, in an uptrend, okay, it must be in discount. And for a downtrend, it must be in premium. So that is our third rule. And our fourth rule here is going to be one-time use, okay? One-time use. So once it's mitigated, once it's tested, then it is no longer valid. All right, so let's play this forward now and see what we get here from the euro. Now, at the moment, you can see we did get a lot of internal highs and lows through here. So just to kind of clear this up, remember that our external low is this one right back here. Okay, so external low down here. This was the external high. Now, you don't map this out until you get this break of structure. Okay, so you have the high back here. We know that this is the external low down here, because we now have a new BOS. Okay, so break of structure up here, that gives us this low down here. We know that this is the external low. Now, everything in between here is all internal. So let's take a look at this now and identify what we just talked about. So we're still with the trend, right? So these rules up here, if you look at this, must be with the trend. We've satisfied that. We're still with the trend. Must trigger a BOS or change of character. We have that here, right? BOS. Now, this one right here, okay, this is what we need to do now. So we need to figure out where is the discount within this leg. So again, because we know that this is the external low down here, and this was the external high that we just broke above, what we can do here is we can start drawing out our fibs. Now, this could change, okay? This could change, because if you look up here at the high, we don't know at this point if this is going to be the high right up here, or if we're just going to continue higher and then get the pullback. So this could change over time. But the point here is that we need to see the market come back here at least to the 50%, ideally back here in this region. All right, so let's go ahead and play this forward now and see if this is in fact the high within this leg. Okay, so moving forward, let's see what we get here from the euro. Now we start dropping lower, and that starts to kind of identify that that is going to be the high. Now let's look back here, and I'm going to draw this out now again from the 50% down here toward the low. So this is our discount window. This is where we need to see the euro trade in order to start looking for a long opportunity. So looking back here at the hourly, you can see that we had an FVG up here that filled. And this is, again, this is where the rules come in, because what you'll notice here is that following this BOS, if you didn't have the rule to look for discount windows like this, then you would be looking at this high up here, or this candle here, this FVG, and you'd be looking at this and saying, well, I want to buy through here. And unfortunately, if you were watching this here at the time and you were thinking that, then this right here, intraday, if you were looking at a 1 minute chart, right, you could have had a change of character through there, and you're looking to buy here and the market just continues lower. And this is why we have these rules set up. So the other FVG here that's really interesting as well, and this is why in a lot of cases, you'll see markets do this as well, where you can see that right off of these highs, you can see this low did not quite test it. Now that's literally like less than a pip right there, but it still satisfies the rules of an FVG. Okay, so we can draw this out down here as a fair value gap. Okay, now here is the dilemma, is that this one here is right at the 50%. Okay, so in this case, what we would do here, remember this one up here, this fair value gap, we can't use because it's not in discount. But what you'll notice is that if we were looking at this in real time, right, because obviously hindsight is always 20/20, but if you're looking at this in real time, you'd be looking at this high back here. And if you drop down to something like a 15-minute time frame and look back here, you've also got areas like this here as well. So this is a 15-minute FVG, and that gives you a window to look for a potential change of character to trade with the trend. Okay, so if we move this up here, now this is our window right here off of this high. Okay, so let's drag this over just to keep it nice and clean. So that is the area that we're watching here for the euro. We're watching for a reaction from this area. So if we go back to our rules, again, we are with the trend. We have a recent break of structure, right? So we had a break of structure within this leg, and that's what's important here. Okay, so you have to have it. It doesn't have to occur immediately. You don't have to get the break of structure on the FVG. For instance, this one back here, but it has to be within this leg. It has to be within this leg here, triggering that break of structure or change of character. And in this case, it is, right? This pocket here, you can see started back here with the low. Okay, so again, from here, you're looking for a low time frame change of character through here. I'm not going to get into it, a bunch in this video, but that is essentially how I go through and mark these up. Okay, so I look for the discount window within the current leg. We're with the trend. And then from there, I just refine. I look for those FVGs, 1 hour, 15 minute, 30 minute to come up with a window. Now, typically, if you're trading something like the 1 hour time frame, you want these windows, they're typically going to be, in the range of 10, maybe 15 pips. If you start getting ranges that are too broad, if you start getting ranges that are, 20, 30 pips, that's going to be problematic, because even though you're looking for confirmation here on the lower time frames, like a change of character, it's going to be problematic because you're going to have such a wide window that, let's just say in this case back here, this was your window that you had drawn. So from here, right, if you were looking at this kind of window, then if you were looking at the 1 minute time frame, for example, back here, you could have had a change of character, and that could have triggered you in, and then you get stopped out. So you want a nice narrow window. Now, you're not going to catch every move. You're not going to catch every setup. But in my opinion, it's better to have a nice narrow range of 10 or 15 pips that you're looking at here for a change of character, just because it's going to give you the best odds of success, okay? So let's move this forward now and see what happens. So was this the low? You can see we got another low right through here. And again, just to drop down here on the 5 minute time frame, right, what you're looking at here is you want to see the market take out a high. So you can see that we did take out this low back here on the 5 minute, close below. That makes this high up here the one to watch. This right here was a change of character. Okay, so bullish change of character there. And if we move this forward, let's see how this plays out. All right, so we have the market pulling back a little bit, consolidation, then we have that massive move. Okay, so you can see that played out really nicely. If you're looking for those low time frame change of characters, once you have your area of interest identified, that is the best way, in my opinion, to get in. Okay, so now if we look at the current price action, you can see that we do have another break of structure here. So off of this high, let's move this over. We have a 1 hour close above. This is a BOS, okay? So we have a trend continuation. Okay, so let's do this one more time because repetition is key here. That's really what's going to make you a successful trader, is just repeating this stuff over and over again and the practice you get. So repetition is everything. So looking here, break of structure here, we have a very clean break. No question about that. Very, decisive, impulsive move here from the euro. And if you'll notice, the FVG that I'm watching here following this break would have been back here, way back here in this area. So this was a 3 candlestick pattern. Obviously, we had a very explosive move out of this. And you can see back here, this is right in the middle of this range here, which is what I like to see. I mean, typically, in most cases, if you look at this here, it's going to be within about 50% or below, and that comes into that discount window again. But if you'll notice here, if you look at the low here to the high, right, back here within the middle, high to the low, down here, you have the market moving within about 50%, okay? So typically you want that 50% or lower. And again, that just circles back to that discount window that we're looking for. So in this case, I have an FVG back here. If I look at the, let's say 15-minute time frame to identify more, you can see that all of these candles back here really serve as a fair value gap for the euro, okay, an area to watch. So what I like to do, because again, there's no guarantee that we come back here and satisfy this exact one. So in this case, in real time, what I'd be looking for here is to map this out to, let's say, this high up here. So this is a fair value gap as well in the 15-minute time frame. And that gives us a pretty decent, let's see the size of this and make sure that we're not too wide here. So we're about like 17, 18 pips, getting a little bit on the wide side, but I'm looking for this area down here. Now, one thing that can narrow this down for us, because remember, we have to be in discount. So once we have this break up here, we know that this low right back here is our new external low. This is what buyers have to hold on to. Okay, so if we move this forward and let's see if this is going to be the high for the euro, okay, so we can draw out those fibs. So let's see what we get here from the euro. We're still moving higher. So I'm not going to draw my fibs out just yet to find that discount window, just because there's really no point at this stage, because I want to make sure that whatever high we have is going to be the external high for the euro. And once we have this pullback here, right, this is enough for me to start drawing this area and looking for our discount window. So again, this was the low back here. This is our external low following the break of structure. If I drag from that low down here up to this recent high, you can see that this right here is our 50%. So what I'm going to do, same thing again. I'm going to draw a box from this area up here, down here to that inception point, and this is going to be my discount window. So this means that I cannot trade up here. I cannot look for buys up here in this area. Okay, so we have to see the euro come back here into this region before I can even think about buying. So let's play this forward now, and I'm going to get rid of the fibs just to keep things clean. So this is our area of interest. Now in this case, remember those two areas, those two levels that we had drawn here, both are within the discount window. Okay, so technically this qualifies. However, in this case, what I would like to see, the market come lower down here toward this level. Okay, the lower the better. And again, we have to wait for confirmation on the low time frame. So this is never a case where we are just looking to blindly buy, from areas like this. Obviously, in hindsight, you can see if you had done that, you would have made money. But that's not the goal here, because we don't know if the market is going to hold on to areas like this. That's why waiting for those low time frame change of character is so important. So looking here, what I'm looking for down here in this region is, again, another change of character. Let's go ahead and see what we get. Now I'm going to remove these two just to keep things nice and clean for us. Okay, so let's play this forward and see what we get here from the euro. All right, so we're still moving higher, just kind of consolidating here. This high is still intact, so I know that the discount window I drew before is still valid. Okay, so let's watch here as the euro comes down here. Okay, now we're in that pocket. So at this point, again, you're looking for the low time frame change of character. And I'm actually going to stop it right there. In fact, I'm going to go back here toward this area because I want to point something out. So once we come back here, if you drop to, let's say, a 15-minute or 5-minute time frame, you can see right here that we did technically have on the 5-minute time frame a break of structure here, and then we had a change of character, right? Now we are in the window here. And so technically, right, you could have been looking to trade this on the pullback. Okay, so break of structure over here, change of character over here. Now you had the change of character. At this point, you're looking for a pullback down here into these FVGs. All right. Now this could have been technically a long, and this is full transparency, guys. There are no guarantees out there in any market or with any method of trading or strategy. Now going back to the hourly time frame, let's see how this plays out. Okay, so playing it forward, you can see we would have gotten stopped out on that. Now, the other thing I will say, though, is this is where time frame really comes into play, because if you're looking at a 1-minute or 5-minute, you're going to have a lot more noise. And so that stop out that we just looked at, you could have avoided that if you were looking at the 15-minute. So let's say you use the 1-hour time frame or 4-hour time frame for directional bias, and then you use the 15-minute for the change of character. In that case, you would have not entered this, because if you look here at these lows, we never closed below this low over here. Okay, so we never had a break of structure back here, right, from the euro. And that meant that this was the high up here. Buyers had to take out, and we never got that. Okay, so we never got that, just lower lows and lower highs here. Now, playing this forward, you can see where we did get a break right over here. Okay, so a break of structure from the euro. All right, so if we map this out to a break of structure, you can see that this is now the high up here. Okay, so this one up here is the one that buyers have to take out. Okay, so break of structure, this is the high that buyers have to take out. We're in this pocket still, and we're technically above these lows, which are technically internal lows as well. Remember, this is the low back here that has to hold now within this uptrend. Okay, so this is our external low right back here. And one thing I do want to note too is that when you get a market, okay, so looking here at the hourly time frame, when you get a market that comes all the way back here toward your area and you just get the market kind of chopping around areas like this, like even though these are internal lows, you can see clearly that we have kind of a shift here from the euro, or at least the start of one, because when you get a market that does this, right, and this is your pattern, and then you get the market just doing this, okay, you've got to be really careful because now we have the market behaving in a different way than it was the past 2 times, okay? So that's kind of your first red flag here from the euro, but let's play this out on the 15-minute time frame and see if we ever would have gotten tagged in here on the 15. Okay, so you can see that we're still moving around, consolidating, come back there, test the lows, still just consolidation, really nothing to do here. Still nothing to do, going sideways, you can see. And again, this is what I mean by the market is behaving different. We're not getting that explosive move off of the lows like we had the past 2 times. And right there, we do have a new break of structure, so that makes this up here the high. And right there, we are below the window. We're below our area of interest, okay? And that right there is reason enough for, at the time, right, I would no longer be looking for buys. Because again, you just have to look at this from a logical standpoint. If you get a market that is doing this within an uptrend, and then all of a sudden you get the market just pulling back, lower high, lower low, and not behaving the same way, that is something worth paying attention to, okay? So in this case, to recap, what you could have seen is that on the 5-minute time frame, if you were looking at that through here, that would have been a loss. Now, if you were on the 15-minute time frame, you never would have gotten tagged into this as a buy, so you never would have traded this. But with that said, though, both of these back here on the 5-minute were longs. And with that, if you were trading back here, and again, I'll get into this in detail in future videos, but these would have been at least 3R trades, if not 5R trades, targeting the highs. So if you had 2 back-to-back 3R trades and then you had a 1R loss, obviously you're up on this leg if you were trading this, okay? I just want to point that out because obviously no strategy is perfect. You are going to have losses in there, but that's also why risk reward comes into play with stuff like this, which I'll get into in future videos as well. But I hope that this has opened your eyes to fair value gaps, which ones to pay attention to, which ones to ignore, because if you follow these 4 rules, I promise you that it is going to help your trading immensely. And if you've gotten this far in this video, I'm going to assume that you're serious about trading. And if you're serious, be sure to check out this video on how to confirm market structure using breakup structure and change of character. So thanks for watching. If you found this helpful, be sure to subscribe to the channel and trade well out there. And I'll talk to you in the next video.